Hello, everyone. Happy PPI Thursday. How is everyone doing? Let me just glance over here. Okay, video's looking pretty good today. Hopefully the audio is still, I didn't make any changes from yesterday. Let me just double check. All right, looks good there. Good morning, Heinrich. Thank you for joining us today. Morning, John. Good morning, Patrick. All the regulars are here. Good morning, McRangers. Good morning, Jake the Snake. Hello, Charles. Good morning, Jacob. Good morning, Royal Palms. Remind me at the end for shop. Hello, Bullstrike Cheetah. Good morning, David Atkins. Welcome. Some new people tuning in. Haven't seen Sterling just yet. Maybe he's tied up at work, but we'll keep going. Oh, Grand Rising, Christoph. What are your thoughts on long term? Well, a long term. Would I be buying up here for a long term hold? No, personally, I would not. It's incredibly overvalued. They have to keep expanding earnings massively to justify this price. Can they do it? Maybe. Would I be accumulating a ton up here? No, because there will be at some point a decent pullback. Now, once you get the pullback, that Palantir is not going away, so it could turn into a long-term hold. But again, it depends your cost basis for it. Would not want to be would not want to be chasing this higher at this point. Thanks for that, Royal Palms. Also, more people, the algos want to see more comments in the, especially after this is done. If people could pop back and leave some comments, that would be appreciated. Let's see, today though, PPI numbers. PPI numbers very hot. And the prior in December were revised higher. Month over month for January up 0.4, expected 0.3. Now a little less than prior, but still, that's climbing at a 4.8% annualized range. Core PPI 0.3, coming in at consensus. We also had the year-over-year core PPI at 3.6 and the headline PPI at 3.5. So again, nowhere near, and this is producer prices index, and you know, that'll say, well, it all doesn't translate into CPI, but a lot of it does. Now, again, I've been thinking inflation was going to be stickier. I've been talking about that for this. I'm not saying inflation is going to go back to 4 or 5%. I'm talking it's going to get stuck at this upper 2, possibly 3 range, and the PPI just reinforces that even more. Now, we'll get some better prints coming up on both of these in a few months, but again, we're nowhere near a 2% target. 2%. It's going to take things tipping over to get there and going into a recession. Initial jobless claims coming in better than expected, 213 versus 215K and down from prior 220, and continuing jobless claims coming in 1850, below consensus and below prior. So those were pretty decent prints right there. Now they're still elevated on continuing jobless claims, but it's better than expected. We have some 4 and 8 week bill auctions, your mortgage rates coming out, but that's it. And tomorrow morning we have retail sales and import prices, export prices. So there's going to be some stuff coming out then. Pay attention, but that's for tomorrow. All right. So far, let me just refresh this real quick. We got Tesla up a bit. Other mega caps are mixed. Tesla getting a slight little bounce, but that's what we're going to be watching for, another rollover play in that. Again, towards the 200, as I keep talking about. That's what I'm watching for. Just refresh this again. Consumer cyclical, basic materials and utilities rallying. By the way, it's strange because of that PPI number, the 2 years rallying pretty up 152 basis points, but the 10-year is down 123 basis points. So big, interesting move in the 10-year. Don't understand it from a fundamental perspective because with hotter expected PPI and especially the CPI number yesterday, 10-year is pulling back with today's print. So we have consumer defensive, and healthcare, the only sectors that are down this morning. Fed Watch tool we have. Let me refresh this one once more too. Let me refresh this one. Stream on X looks and sounds fine. In case you were, thank you for that feedback. I really appreciate that, Patrick. I'm trying to get everything dialed in at the new house. So any feedback you give me is really appreciated. This is interesting also now because the first cut based off this PPI data is back to September from October. So again, the market's reacting like this was a very dovish print, but it wasn't a dovish print. Don't know. Again, that's why I can only trade the technicals, because if you ask me what would be happening against this print, I'd say the markets would be pulling back, the 10-year yield would be rising. Right now, markets are rallying, 10-year yield is dropping. That's why I got to go off patterns. Again, logic doesn't have to make sense, or my understanding doesn't have to make sense from a fundamental perspective. It just has to be the patterns to trade. We're in fear mode based off of that, and not a cheap market. By the way, in terms of earnings, John Deere, which was a beat, but dropped. Beat. I did not see their guidance, but they did drop after a beat. A pretty decent so far, a pretty decent headline appearing earnings report from Deere, but haven't looked behind the scenes. After close, we got Coinbase, Applied Materials, Airbnb, Palo Alto Networks, Roku, but nothing's really going to move the markets. And tomorrow, there's really nothing that's going to move the markets based off earnings. All right. Good morning, Ted. No problem. They haven't asked you your schedule to reschedule around you, Sterling. Good morning, Anissa. Again, they don't know how valuable Sterling is to this channel, and they keep scheduling work meetings. All right, Sterling will be putting in earnings there. Now, overall, dip got bought yesterday. By the way, I just wanted to point something out. This is a key, nice little pattern. I said I was watching that 15-minute rotation zone yesterday, running back up there, got the reaction down. So what I like to do is come back here. You see I was between the 50 and the 62.5. So therefore, I watch for another move back up, because remember, between the 50 and 62.5, and it did not close below the 62.5. If this red candle had closed below the 62.5, I would have started watching for the bigger pullback and a bigger bottoming pattern. But this, and then on the resumptive move back up, now it's, at least from my perspective, in short-term bullish mode. Especially we had the first key area, that 60-65 running up there, reacting back down. But even on the next reaction, look at this. You see this is the 50, this is 62.5, spiking right down to 62.5 and then rotating back up. Those are the kind of patterns, if you're looking to research something and study them, that would be an area I would start with. If you're an intraday trader, although the 50 and 62.5, works fantastic on longer time frames. All right, where do we sit now? Market really coiling up. Got bought yesterday on any dips. We're still getting bought. Especially down close to that 60, 16, 60, 20 area. And we're getting some minor selling pressure. But if it can really get through this 60, 90, and then continuing to follow through above 61.06, I'll watch, because then you'll have bears sort of trapped there. That's the key breakout level, and the key breakdown level, at least today, is that 60-65. So that's what I'm looking for right there. Let's see. This market is cocoa crazy. Buy. Yep, it is. It's retail, and it's a lot of retail just shrugging off everything and buying everything. So right now, based off the PPI out of the way, again, minor support 60-65 into the open, and then your minor resistance would be 60-90, 60-92 area, but then that key is very 61.06. And if we were to break down 60-65, 60-50, and then 60-16. But I'm going to be watching to see if we really do break out to the upside. NASDAQ, this key trend line, yesterday running up, hitting it again and dropping off a bit. Today, trying to take it out. Now, it has to really settle above here, because it's poked above it a couple times, but had selling pressure. Selling pressure up there. In the NASDAQ, the very key support level going into the open is right about 21,730 to about 21,750. We drop below that. Let me move this just move that. The key next level lower for the NASDAQ, the really key level at this point, I'm bringing this up to right around there, the 21,520 to 21,500 is key support. Same thing with the NASDAQ. If it breaks out of this, if it can break out today to the upside, I'll be looking for about 22,050. But that's it. There's not a fantastic pattern in the NASDAQ right now. The Dow still has a double top in place. Let's see, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. If this is not triggered today, then it's going to be off the table. It's going to be too extended to the right-hand side. So keep that in mind. Other than that, very key resistance is 44,750. Very key support is down at 44,175. The Russell, little bounce back here. Did not pull back far enough yesterday to invalidate the double top. So it is still in place and is not extended too far to the right. So we'll keep an eye on that. But the double bottom has not been invalidated. The double top that was triggered way back on December 18th is still in play. None of this price action has ever invalidated it. The VIX, still little pop up yesterday and then dropping, and again, no fear in this market. No fear in this market at all. The DAX, we have now hit the very, very key cluster and very overextended, and at weekly cycle tops, very overbought, and at getting to daily cycle tops. Is there a major topping pattern yet? No. But I am starting to watch for more of a pullback in the DAX. Do not have new targets yet because we do not have a key pausing bar. If we had to use a minor pausing bar for the next key areas, we'd have to go to here, which would give us 22,972 and then potentially 24,037. But I'd want a more substantial pausing bar, which we do not have yet. The notes, as I said, rallying after that PPI data. Very key resistance, though, at 108.27. Holding support yesterday based off the low prints, not the closing print, but the low prints. I'm going to be watching for it if this can kiss the trend line goodbye and roll back over. The yield pulling back, but again, nothing to invalidate the trend yet after spiking up yesterday to 62.5. So not surprising to see a reaction. I'm just surprised to see this much of a pullback in the micro yields. But again, as I started off, it doesn't matter if I'm surprised. I have to look at the technical patterns. And in the short term, we did hit between the potential short-term topping area. So now I'm watching to see this would be the secondary reaction down to see what kind of setup it makes, because I'm still going to be watching for a resumption in potentially a 10-year up move, unless we break back below about 4.5 on a closing basis. The 2-year yield, though, you see, moving up pretty decently today off of that PPI print. Now the 10-2s bouncing again. The 10-2s bouncing again. We don't check in on this much. It's still elevated. I'm surprised the market just keeps shrugging this off too. But the market seems to shrug off everything. Dollar index. Dollar index based off this pullback has, after only hitting the first target, is over on the little mini double. So at this point, the breakout levels now are about 108. The breakdown level is really coming to about 107. So between 107 and 108 is no man's land, but those are my key support and resistance areas. Let me bump this down to 107. And let me raise this to 108. Those are the two key levels I'm looking at the dollar index for either a breakout or a breakdown. Crude. Now we're back between the 50 and 62.5. I'm still watching for this to pull back to key support, but we do now have a potential double bottom. Nowhere near triggering, but that's the only thing that really gets me in. That's the only thing that could put me in crude bullish mode. Other than that, going to be watching for a continued drop into support. Let's see. Did I say good morning? Oh, yeah, I did to hey. We have a potential bearish divergence on a gold chart. Good. Thank you for mentioning that, because on gold, We also, what do we have here? Let's see if I could draw it in the right place. Look at that. Qualifies for a potential double top. So we have that in place, which makes yesterday's low. We did not close below Tuesday's low, which was the key thing I was watching. Did not close, came down into the rotation zone yesterday and rotated back up. But this has now set up a potential double top. All right. So, and we are at cycle top, so I'm keeping a close eye on that. So from a short term, now long term, would this pattern invalidate anything? No. Long term, see, it would just take us back to the weekly rotation zone. But for short term, it could be a much bigger pullback. It is going against the daily rotation zone, so I'd really be focused on that first target of about 28.55 if it were to trigger, which it has not yet. And would I front run anything like this? No. I'd use this as a trailing level and look to see how it reacts at these targets if I was a short-term buyer of gold. By the way, copper also in a potential daily double. It has not passed the 4.758 level, so it got close. But this is, you can see it here on the 4 hour, this is still a potential double top. And you have a little minor double within double. But that's the only thing on copper where I say I'm watching for potential topping patterns now against the rotation zone. What target would I be looking for on any pullback? About 4.45 if that were to trigger. That would be a very key area I'd be looking at because that's also lining up with the prior key resistance becoming support. The yen still respecting the declining trend line, so I'm going to be looking at this pullback. This now would be the secondary reaction to see if we're going to get a buy set up in the yen, but nothing yet. Nothing yet. Spiders, little gap up today. 604.54. So on any rollover play, it would be to yesterday's close, 603.36, and then very key support in the spiders is coming down around yesterday's open, 599.20. The key target, if this can sustain above 605.50, the next key target I'm using is 607.40. The Qs, again, on any rollover play would be the gap fill to there. The Qs have to start really breaking. There's some substantial resistance right around 530. It's opening just at that level. If we get above there and can finally break out, and this is not necessarily today, this could be for tomorrow too. My first target is 532.75, and the next target is 534.22 to take it to the 87.5. Scrolling. Thank you for putting in all those earnings. That's what I don't, it doesn't make sense to me. That's why I can only trade the patterns. Does not make any sense to me, Richard. Let's get this over to see some other questions. Are notes going up on tariff news, increased government revenue? I'm confused. I'm confused too. And again, oh, thank you for bringing that up. Trump's supposed to announce reciprocal tariffs at 1 p.m. Eastern. So we'll see off of that. But, you know, that's not going to be deflationary or disinflationary. So again, oh boy. They are. That doesn't mean I'm the smartest in the room. That's why I got to trade patterns. But I don't know what's driving this today. Please read the fall. I see your shop request, Royal Palms. I'll get to it. This may be the stupidest statement Jerome Powell has ever made. Powell, if Doge eliminated $1 trillion of spending, it's hard to say how it would affect the economy. Again, this is why I don't listen to that. I just wish we don't need to hear Fed speak. Powell, they have no clue what they're doing. They're data dependent, but they're not data dependent. They have no justification for still doing that 50 basis point cut back into September. If they wanted to cut, they should have done 25, and they should have not done the December cut. I don't know what they're doing. I don't think they know what they're doing. Wasn't inflation already transitory from years ago when we still haven't got back to 2%? Oh, boy. That's why we just need a rule. We don't need 12 clowns in a room trying to look at the data and be wrong all the time. By the way, Bitcoin still caught in the range. Key breakout, I'm dropping the key breakout level to about 98,150. And the key support level right now for me is about 94,700. So those are my breakout and breakdown levels for that. Let's get to shop for Royal Palms. What does the long-term shop look like? Watch where this candle closes this week. Now, shop from a fundamental perspective is still very overbought. I'm watching to see where it closes this week in relation to 62.5. Now, the only thing that then would make me turn bearish in the short term is if you trigger that double top. That double top would then have me watching for a bigger pullback. Other than that, I'd be watching for consolidation, especially on any pullback to about 112. That 112 area might not even get back that far. If it starts getting below the 115 and then can't sustain 112 and then kisses goodbye the 50, that could be a front run to at least test this potential double top. You can see it pretty well on the daily formed up here also. So other than that, it's closed above the 62.5 on a daily basis, just not a weekly. Next target's higher. If this levels can hold even on a minor pullback, the next key target is 138.13. Let's just see on the longer term harmonics from this key reversal area where that puts us to on a weekly basis. Let's take a look. So here's our harmonics. So you see where I came up with that? You could have used this one, but this one was a breakout candle, a very key reversal candle. It's going to give you virtually the same area. And again, we're looking for areas. So from the bullish case, on a continued climb up, 129.75 would be an area I'd at least look to raise a stop. And now you have a key cluster with the 75% harmonic and the 25% extension harmonic. I hope people see I'm coming up with those levels. So that would be definitely at least another stop raise, if not some partial profits, on a continued bull case. And you look here on the weekly rotation zone, any pullback even to that, if we start dropping below that 115 to 112 area, any pullback I'd be watching closer to the bottom of the weekly rotation zone, but that could still catch it without triggering the double. That's why if this double did trigger, though, on a close below 99.05, look where the target takes us on the weekly basis, potentially back, because it's out of the way of the rotation zone, it would potentially take us back to the 200 and a prior key support area. That's the only thing that would make me short-term bearish. So again, I don't care if you trade shop or not. The key thing is to learn how to, key thing that I'd like you to learn is how to set up and structure things using harmonics and rotation zones so you can at least work out your own roadmap. And then you can structure a reward to risk and find out if you have a short-term trade or even a medium-term trade. What else? Good morning, Eric. It's what happens in the charts. All the rest is noise. I completely agree. Bull strike. Intel is trading at book value. How is that possible? Because Intel's worth a lot still liquidated. If you liquidated their plants and their manufacturing, chip manufacturing, it's still worth a fair amount. Actually, I agree with Coco. They should put an AI robot. They should come up with a structured, let's have a rule. Let's have a rule. And then, let's have an AI chatbot run the Fed with a rule. It would be better than this clown show. Yeah, but I don't know yet, because what's changed from yesterday? We've only had what came out this morning, Sterling? I'm not disagreeing with you, but what came out this that said, hey, Trump's talking reciprocal tariffs today. I'm wondering what's dovish with the 10-year, because I haven't seen anything. Can we peek at Tesla? Yes, we can, Christoph. Daniel said it first. Hey, Daniel, send me an email if you have a chance. I want to tell you something. Tesla, again, weekly basis, I'm still expecting weekly. It now looks like even with a bounce, we might close below the rotation zone on the weekly. The dailies on any bounces, I'd be watching for rollover plays. Major resistance is 382. Minor resistance is about 357, 358 area. Do you have any potential bottoming pattern just yet? No. Not even a short-term bounce pattern. If you're looking for a short-term bounce pattern, I'd be watching to see if we structure anything. It pulled back to this 50% harmonic. So if it rallies up, minor's 357 on a continued little bounce play. Overall, as I said before, I'm watching for rollover plays to take this right down to the 62.5 harmonic in the 200. And the prior key breakout level that we broke out after there's the election where you have Elon being Mr. Doge after Trump winning the election. This, in order for me to get anything to the upside, you're looking at 370. It would have to retake this breakdown zone, and look where all the key moving averages are. The 50, the 21, the 8, all reinforcing that. So for me to do anything but a very short-term bounce play, it would have to regain 382. Other than that, I'd be structuring things to look for rollover plays. All right, market open. Let's just, since we're still here, let's see. Getting some buying pressure coming in. I want to see where the tick is. I want to take a look at where the tick is. The tick, very strong tick opening at 1200. Lots of, geez. So completely shrugging off everything this morning. A tick opening at 1200, equivalent to the tick opening from Monday. Again, you just have so much retail buying going on right now. That's why I cannot look to overall get bearish on this market yet until it can break down. Going into the open now, 60.90 is key. Start getting above that. Looking for me would be raising a stop at 6100 with then a first target being 6106 if it can sustain something. So again, when the tick's that strong, what I look for is to see how it reacts on the tick pullback and if it holds key support. And the key support for me would be 6077 to 6078 going into the open right now. To paraphrase Pink Floyd, leave the rates alone. Well, you know what? See, look at the shirt I have on today. Pink Floyd. See, Richard knew something was going on. You knew it, Richard. I got the Pink Floyd tie-dye on today. Trump is giving a press conference today with highlights some specifics on the waste that the Dodge team has found and eliminated. The only thing I can think of causing the dovishness, maybe. Again, I'll just have to trade the patterns. I can't always make sense of the markets. That's why I suggest that people learn to trade patterns and not what they think is going to happen off the prints, but what actually is happening. Yeah, there you go, Richard. Got the Pink Floyd, leave those rates alone. Oh, boy. All right, everyone. I hope you have a wonderful trading day. I will see you all back tomorrow to wrap up the week. Also, remember, next Monday is President's Day. It is a market holiday, so stocks will be closed. Futures will have shortened trading hours. I'll talk to everyone, though, tomorrow, and we'll see how those retail sales print. Until then, bye for now.